Hello, how are you today? My name is Lynda Hafner and I am a top producing realtor at ERA Key Realty in Central Massachusetts. Today, we're going to go into a little bit more detail for first-time home buyers as far as what are the costs involved when you buy your first home. Today's video is a continuation of a little bit more detail from the video that I did previously that talked about 13 questions that first-time home buyers have. This was question number 7, but today I'm just going to go into a little bit more detail, fill in a couple of gaps from that video. And if you haven't seen that video, please by all means check it out. Subscribe to my future videos. I try to put out a video every other week or week as often as I can and give you information so that when you're buying a home, you can make the best decisions for yourself. I work with a lot of first-time home buyers, so I'm going to distinguish between the costs of buying a house, which I'm going to go over all the costs first, and then I will kind of go into which costs of those can be financed and which do you actually need the cash up front for, just to distinguish between the two. Because as a first-time home buyer, you may not have as much accessible cash as someone who already has owned a home and has built equity and all of that. So let's break this down for you. I would probably classify the costs associated with buying a home in 6 different categories. One is going to be the deposit. That's going to be 3 to 5% for a first-time home buyer. You know, of course you can do more. I mean, by all means, if you want to do 20%, you can. That will save you on PMI. But 3% could get you into a home if that's all you have. So it's good to know that option. 2 would be the lender required cash reserves in your bank. What that means is that the lender wants to see that you have untouched money in your bank account, usually 2 months mortgage payment, so it depends on how much the house is that you're buying and what your mortgage payment will be as to how much they actually require you to have in the bank. But that is something you are going to have some money in your bank so that they have the guarantee that, you know, if you lost your job tomorrow, you would at least have 2 months worth of payments and they're not stuck with the bill. Pretty much, that's what that is. Actually, I got a little ahead of myself on that. Sorry, that was actually number 3 on the board. Number 2 would be the costs associated with the closing process. And basically, that also involves the costs associated with getting a loan. And the reason why I want that at the beginning is because even though the closing does come at the end, you want to be aware in the very beginning what costs are associated with the particular type of loan that you are going for. Like, for example, if you have a VA loan, you're going to have a funding fee. Now, in a conventional loan, you won't have a funding fee. But in a, in order to get a lower interest rate, you might have to pay points. You know, these are the things that you want to talk with your lender about before you even get the pre-approval letter, before you even go out house hunting. So you want to evaluate all the different costs associated with each different loan so that you can make the best choice for yourself. So even though they're technically, none of these costs are paid until the closing, you want to be aware what they are before you go house hunting so that you can pick the best loan that matches your financial profile. And the only way you're going to know what that is and how much that is by talking with a lender. So I would highly suggest you doing that before you even go house hunting. So continuing on, the 4th would be the home inspection, the 5th is going to be appraisal costs, and the 6th is going to be whatever your moving costs are. So before you start your journey into purchasing a house, it's important to know what these costs are going to be so that you can prepare in advance. So let's go through them a little more detail one by one. So for the first one, the deposit money. Now, if you have an FHA loan, you need 3.5% of the cost of the house as your deposit. For a conventional loan, depending on what your interest rate is, you can go with either 3% or 5%. The more money that you put down though, the lower your mortgage insurance is going to be. And that's a monthly cost that the lender charges you if you don't have 20% deposit. It just is kind of an insurance policy for them that if you have a default on the loan, that they have, you know, it lowers their risk factor with lending to you is basically what it is. I paid private mortgage insurance. To me, it was the way to go. I wasn't a very good saver at all when I bought my first house, and it was just easier for me to put less money down, pay the PMI until I could refinance, and I had the 20% invested in the house, and then I could change that and get the PMI off. So, you know, it's kind of like a pain in the neck, but it's worth it if it gets you into the house that you want. 0% down payment, the lender will tell you that yes, a veterans loan and a USDA loan, yes, you can put 0% down on a home. The lender will tell you that. As a realtor, I'm gonna tell you probably not. It's gonna be really difficult because most sellers really want a little bit of your skin in the game. They want a little bit of a deposit from you. Even if the lender refunds you that at closing, it's good to have at least some amount of your own money to put as a deposit to give to the seller at the initial offer and the purchase and sale agreement. So then there's the costs that are associated with the particular loan that you have. That's number 2. And that basically, to me, that's the same as closing costs. Closing costs, what does that include? That includes a lot of fees all rolled into one. And in Massachusetts, they usually end up being somewhere, the average is like $5,000 to $6,000, but it depends on the cost of the house too. If you're buying a, you know, $400,000, $500,000, $600,000 home, the closing costs are going to be more because part of the closing cost fee is insurance and taxes, and all of that is part of the closing costs, and that's all going to be bumped up. But some of the other costs involved are basically, you know, are you paying any points or to get a lower interest rate or not? You know, are there any, what are the origination fees? What is the lender charging you to write the loan, to underwrite the loan, for all the work they have involved with giving you this loan? You know, there is a certain fee for that. Every lender has it. They vary a little bit. They're pretty similar though. And then what other fees are there? Let me just think. The private mortgage insurance. That's if you don't have 20% to put down, you're going to need to know what the private mortgage insurance is, and you're going to have a certain amount of that to escrow at closing, and that would be part of the closing costs. Prepaid insurance, any prepaid utilities, like if they have oil in the tank, these are all considered closing costs. Lawyer fees, whatever you pay your lawyer. You know what's not in there is a realtor fee. When you buy a home, you don't have to pay a realtor. The seller does. So that is great for you as a first-time home buyer. You don't have to pay any realtor commission. The seller actually has to split the commission between the list agent and the buying agent, whoever you have representing you as your buyer agent. Number 3 behind me is the lender required reserves. It's usually 2 months mortgage payment. Some banks may vary a little. I've seen it go up to all the way up to 4 months. It really depends on the lender. But again, these are the things and the questions that you want to ask your lender before you get your pre-approval letter, before you start the process. That's why I want to do these videos, because a lot of first-time home buyers have no idea that there are options, choices, and I just want to make you aware of that. The 4th cost when you're buying a house would be a home inspection. And your realtor who you're working with can recommend several really good home inspectors. And the cost for that's going to vary on what tests that you actually want to do. Do you want to do just a standard home inspection, usually $450, $500 in Massachusetts, but it gets a little pricey if you want to do like a water test and a radon test. Radon's like $50, $60 extra, but water tests can be significant. They can be $275 if you're going to test the well. You know, that can be a little pricier. So, you know, it varies, but that's about Right. And then after the home inspection, when you sign the purchase and sale agreement, you then have to pay for the appraisal. Now, technically, they consider this a closing cost, but a lot of banks actually require you to pay them cash because the appraisal companies are not a part of the bank. They're actually a separate company, and the bank literally has to pay them, and they expect you to come up with the cash for that. And that's in the vicinity in Massachusetts, $500 to $600. Closing costs I've already discussed with you. That's, the final thing. And then the last thing after closing costs would be, of course, moving costs, and that's going to vary considerably. I mean, you could have somebody pack up all your stuff and spend $2,000 on a deluxe moving, but as a first-time home buyer, more likely, you're going to get a bunch of friends, grab a pickup truck, and have them, move your things. So it could be minimal. It's really, that's personal preference on your part. But, it is something that if you are hiring a mover, I would at least suggest, doing a little research, calling a couple places, getting an idea of what those costs are. So those are all the costs involved in purchasing, but not all of that has to be cash. Obviously, the deposit money has to be cash, although you can get a gift letter for a good majority of that, maybe even all, depending on what type of loan you have. So that's possible. It could be given to you from a close family member or parent, something like that. That has to be cash. You need that. You need to have the cash reserves in the bank. And you definitely need the cash to pay for the home inspection and the appraisal. But the closing costs that are there, those are most often with first-time home buyers financed into part of the loan. And basically what I do for my first-time home buyers is that I take the price of the home, say the home is like $270,000, okay? And you want $6,000 to pay for your closing costs. So instead of putting the offer in at $270,000, you put the offer in at $276,000, and then in the provisions of the offer, you write that $6,000 you want cash back to pay for your closing costs. That way, the lender just finances it all in. It's a little bit of less strain on you so that you have cash to do, maybe buy some furniture or do a couple of repairs or things like that. I just think it's a much better way for a first-time home buyer to go, especially if they're a little strapped when they are buying it. Moving costs, I mean, I don't know if that is going to be, do you need cash for that? I really don't know. It really depends. That could be, maybe you could put it on a credit card, but it depends. If your debt to income ratio is tight, you wouldn't want to do that. So again, these are things you want to talk to a lender about. But bottom line, this covers everything. This will give you the knowledge you need to buy your first home. And if you need help buying your first home, I would love to help you. I love helping first-time home buyers. It's just such an exciting journey. And I hope you have a great day and check out my next video. Bye.